Good morning, everyone. So yesterday was a pretty negative day, obviously. Big red nasty bar there. And so is it over? Is this correction over yet? I would say emphatically no. And while we get that big red bar, typically it's followed by a consolidation day. I would just really like to see this drop down below that prior low, at least for a counter trend rally. I still don't think it would be over yet, but that pattern would be one in which we get a greater insight as to whether momentum is slowing. So this bar is not done. The way we determine slowing momentum is after prices have been moving down for whatever, in this case, whether it's 5 bars or 3 bars or whatever. Once we get a green bar, right, which means at least it closed above the open, there's been some change. What's the distance between the lows? So you can see here, there was strong momentum. What does that lead to? It's going lower because it started from a consolidation. Then at this time, we talked about a retest pattern that would set up a short. We talked about a possible higher high. Some indices did that. It went lower. And now we thought it would come up here. It didn't, which reinforces the fact that sellers were more aggressive than we thought that they might be because they couldn't get it to that resistance area. And we had the little pop-up bar there, a little breakout failure. And yesterday was a nasty day. So today's starting, I don't know what got this pop to go there. That was 3 o'clock in the morning. I guess Germany opened up and there was some kind of a rally. And now it's rolling back over. So there's been a lot of technical reversals and rallies to resistance that roll back over again. So this is not over yet. And our internals, we came into the week with them about neutral and really kind of surprised. Well, maybe I shouldn't be with this market, but even intraday, there really has not been an overwhelming amount of bearish bets, meaning put options versus call options, which, this should be rolled over, you would think, from yesterday. And I could look the day-to-day data, but it should have been much more negative than it was, and it wasn't. So that's what we want to see. These internals come down again, but just taking a look at a much broader sense, we typically go through the futures and the broader market indices here, but take a look at this. So this gives you a view of the S&P ETFs and some ETFs around the world. UK, France, Germany. This is a hedged Europe fund, so you don't have the dollar risk. Euro stock futures, emerging markets. Taiwan broke down below support yesterday. And what do we have here? EEM. Is that a double? No. Okay, these emerging markets, a broader one. And then, of course, the S&P 500. And just looking at what happened here, look at the financials. Right? Over the weekend in the letter, we talked about this consolidation. These are weekly charts. So that bar isn't done yet, but it broke down under there. Now, energy, we all know, is going up, but nothing here looks good or even beginning to turn. Well, utilities went up there, but up the top of the range there. And so just going to the daily time frames, as to what happened yesterday, big red bars. So communications have been weak for a long time. But so anyway, what we'd like to see is a violation of the January low that sets up some type of reversal. Now, as far as momentum goes, slowing momentum, does it just poke under the low, or does it go down 5 bars under the low and momentum picks up again to the downside? And we'll see how that plays out. Now, healthcare, which was getting better, we see had a negative reversal there. Could it be just yesterday's negative day? Does that become a red bar ignored, or is it going to go back down with everything else? So something we'll see how that unfolds today. But I just wanted to point out how negative things look. And if looking at the U.S. markets, these ETFs, compared to Europe, they look pretty good, right? I mean, relative strength wise, anyway. None of them are good looking, but they're not like Germany just falling here in a climactic way. And just looking a little further out to the monthlies, they got more to go before you would think anybody wants to buy these, so they're just starting to break down. All right, McGruss and XLV. Right here, XLV is here. Monthly is in an uptrend, but that failure up there, and the weekly doesn't look so bad. But yesterday, and we talked about this, one of the things we looked at in the letter, the ETF letter, and even reviewed this in the advisory letter, was this was one of the better looking sectors. And now the question is, was yesterday just because of the negative day of the market? If this could turn around, that would be a fantastic long setup above here. So something we'll be watching to see how that unfolds. All right, broader markets, as we always look at, consolidation so far, factory work. Oh, come on. Let's just stay in the bottom of the big red bar. There's nothing here, meaning the way it went down created a void. Here's the pivot, another pivot. Now it's trying to roll back over again. You can see the 5-minute there. Scroll this over here a little bit. So a little bit of uncertainty again here, pre-market. NASDAQ closer to the low, sell setup. So once it takes it out, right, that's what we'll be watching to see if it can make at least some kind of a turn for a counter trend bounce. Maybe ultimately coming down here to around 12,500. You can see these are the futures, be about a 25% correction, and that's where we'd be looking for that slowing momentum, and the lows getting closer together, little sideways price action, and bars like this, big range bars, once they've reached their destination and our internals are lined up, that's the kind of price action that we'll be looking for. So looking at the ETF, I was putting in perspective yesterday, big red bar, and sell here and see if it goes down. And yet yesterday's theme, as we reviewed everything on YouTube, what it was titled is this, technical turns, meaning just, something reached support and it bounces back up. It's within an uptrend, or is it meaningful? And what we saw was this rally overnight that was up into resistance, and it just rolled back over again. So just want to see this continue to go down. Drag this down here. Right, somewhere down here. Ain't getting up there anytime soon. Do it that way too. Sometimes these things are difficult to grab. To have our reference point. So everything is getting close. As it went down there overnight, it bounced back up as it got close to the low. So just another technical bounce. It's down at the bottom of the range where it's opening here, and so no big deal. Sellers are still in control. Yeah. Russell, bottom of the trading range. What's the question? Will this break? I'm looking at the Russell here. It's just a bearish pattern. How much bearish can you get than to have a failed breakout from a year-long base and then break down again? So, but if just, eventually we'll be talking about a turn and a bottoming pattern and the market stabilizing and some kind of a rally sometime this year, next, I guess, month or so. But this is the kind of price action we'd be looking for, where prices come down and test a low, and we get wide range bars and so on. So patterns that we look for turning points aren't, how do you say, you have to put them in perspective of the environment that the markets are in, as well as looking at patterns as to what's to the left. Are they forming in an area of price support? So patterns are one piece of the concepts, or what we look at for making trading decisions, but the location of where patterns form or one concept, which increases the reliability of them, meaning are they forming in an area of support? Are internals lined up? Are other markets lined up? So where we've gotten this type of a bottoming type of a pattern, we've got this nasty looking weekly chart over here and other markets that are still in their corrective modes. And so this is showing a little bit of relative strength. Bitcoin at the bottom of the trading range. We'll see if it can hold or not. You can see back here, we were looking for it to come down to 30,000. Maybe it will, but you see it's been holding this area here, and it's down here again. So we'd like to see some kind of a range expansion bar, some kind of bar that tells us that buyers have stepped up in a meaningful way, like they did here and like they did here. If they couldn't get it above resistance. So we'll see what happens here in the next day or two. Crude oil continues to be strong, not up at pre-market highs yesterday, but still hanging up there. Just continues to show strength, where even though it's extended a bit, where it's come out of this consolidation, buyers are buying the dip. Well, you can see here, pivot low, retest buyers. So still in an uptrend and buyers still in control. A lot of the stocks are extended. Corrected a bit yesterday. Silver continuing to push up. It cleared these highs. So it looks like it's going to go higher. Buy the dip here. And so one of the signs of a bullish market, well, not necessarily equities, but looking at silver, is when you get a breakdown like this and it immediately reverses back up again. How much bullish could that be? As, in the opposite of that is what we just looked at with the Russell, meaning how much bearish could that be, where prices come out of a consolidation and break out with such a powerful wide range bar and immediately fail. So that is so bearish. And, this is only a 5-minute chart, but the concept applies to intraday timeframes, where that broke down and it came right back up again. Gold continues a little extended, but still buying the dip here. And interest rates stable for the moment. Transports, same nasty day yesterday. And VIX. Surprisingly, it didn't go higher. And, that just might be a sign of complacency and why this market does need to go lower, to where, and I've seen this, in the past, where markets are going down and the VIX doesn't go up. And it's been a sign of complacency. And eventually what happened was the markets went down in a nasty way and the VIX spiked up. And it was one of those situations where it was like, this thing's going a lot lower, and it was the low. No, I'm just saying it didn't spike very far, McGraw, right? Whatever, 35 and 2% moves, the way we got that big red bar, I would have thought that it would have had a bigger move or would have came up to this high. And so again, the point being is that we want to see that fear. We want to see a put call ratio intraday up there at 1.5. We want to see this VIX spiking higher. We want to see institutions scared to death. And that's how bottoms begin. Right? So we're just not there yet. And keep an eye on this. You see these two numbers here? The 5-year and the 10-year? You see how close they are? I may not talk about this day to day, but these numbers are getting closer together. which means you're going to get this. So yield curves are nothing more than the difference between two prices. So they call it a curve, right? But these numbers are getting quite close together, which eventually points to or signals recession is coming. And so, the inflation theme, price of oil going up, and then the demand for money begins to contract. Nobody wants to borrow, so interest rates, this starts to come down. This is going up. The two meet. What are the numbers? Can't see the screen. Right here where I'm pointing to, I can drag this over. You should see the whole screen there. These are the symbols: 5-year, 10-year, 30-year. So you can make it composite. This is where I was showing you this about a week or so ago, which is just simply showing you the difference between some of these numbers. And so, we can see how, these have been coming down. This is the 3-month versus the 30-year, and it's still high, but it spiked down about a week ago. So, you could just keep an eye on these numbers, and you can see them day to day. And when they're getting closer together. So not only, do we have this inflation thing, we've got this situation that's progressing to where, this correction may truly turn into, like at the beginning of the year, it was like, okay, the correction is coming. This was the thoughts, and, normal correction within a bull market. Well, now with this oil going up as much as it has and inflation as high as it's been, I mean, if this starts coming down, and so Dan, we were talking yesterday in the room about this, and now you go and look at these dates. I don't have the S&P in here, but we scroll this back and look at these times where down here, we all know what happened after 2000, right? We all know what happened over here and over here. So these are very long-term market internal gauges, but the turns that when this gets to where it is, the market typically doesn't turn on a dime. And the same thing here, when liquidity becomes historically extremely high, the market doesn't bottom immediately. So we still got something, a piece of information here that's supportive of, maybe things won't be so bad. And when it's a bear market, maybe the markets can go down 40 or 50% versus, just 20% or what have you. So these are things that, we'll have to keep an eye on, and we will. But that's the kind of information that you can go read the paper all you want, or go to some website or what everybody's opinion is. But these are the things that you can look at yourself and know what's happening in the market from a long-term perspective and from a short to intermediate term perspective. All yours, Dan. SPY chart. Deepak wanted to look at SPY chart.
But Greg, on the
looks ugly. It's going lower.
On the yield curve, I thought you looked at wider ones, like 2 to 10, or not 5 to 10, or 2 to 20, or. Can you hear me? Hello, good morning. I think Greg has me muted.
No, I don't.
Oh, I was asking you about the yield curve.
Oh, that I didn't hear.
I said for inversion, isn't 5 to 10 tight? I thought we looked at 2 to 10 or 2 to 20.
No, I look at 3 to 30. I look at between 5 and 10 to 5 and the 10, 5 and the 30, 5 and the 10-year, the 3-month and the 10-year. So we look at different ones, and I mean, like I said, you really all you need to do is look at the two numbers. If they're getting close together, or the shorter one gets above the longer term one, it's inverted.
No, of course. I just thought though the meaning we're looking for wider spread than 5 to 10. That's all. All right, we'll continue here. So we got a number of shorts open. So they're doing fine. I've been tightening stops. Here's a beautiful gapper here today, SPWR. It's in the solar. We have an open tan position in the ETF letter. Beautiful gap reversal, up, down, support, turn, gap up, gapping up again. Fizzler, I was looking for a put spread yesterday, but no juice. But SPWR, another gap reversal, made a higher high. It's above 20, 50 flattening out. Now it's gapping up over yesterday's high. 30-minute high looks great. Greg mentioned Bitcoin, so let's keep an eye on some of these ETFs. BITO is one of them, gapping up to yesterday's high. So I think we can just try to get filled a limit on the $23 puts. Stop under yesterday's, stop under 23. We'll keep an eye on some of these other ones. Block is weaker, obviously, right? Remember we do the A/B test? BITO is substantially better than block. But yeah, let's wait 30 minutes and let's go hunting around at some of the Bitcoin stocks. And then, you got Riot tomorrow. But Mister's been on my list here for a while. That's gapping up. So Mister is a naked, we can go under 300 and there's still juice for Friday. I mean, this stock can move, but it's one of my favorite for shorting naked puts when we get a pattern, just because they're so juicy. Diego's asking about, think of the stop DB for long intraday in 5 minutes. What do you think of the stop DBs? Deutsche Bank. Okay, so I'm assuming you are asking me, if you do buy this, what should your stop be? Well, the answer is depends on what time frame you're trading and what the pattern is. Using pre-market data here, there's no pattern. It's a bullish gap up on the daily, but pre-market it's rallied right to resistance. Let's go look at a couple. We're tailing, trimming down on earnings season here, so there's not so many. BTNR, a little oil stock. But what got my interest here was the monthly. Monthly could go to $9-10. So it's a bullish gap over yesterday's red bar. Maybe 30-minute high. That has some room. Jacopo FTCI. Never heard of that. FTCI. Yeah. So red. Yeah, I like it actually. It's you got a little bear sandwich breaking out. It has a price. I like it, Jacopo. Thanks. That's a nice little bottoming pattern. I'm going to put that in a little window. FTCI. The other one, ALHC. Not bad. I see one print here gapping down because of the tails. I actually like the other one better, but see what it does in the first 30 minutes. Maybe this one print is not valid. TMC, another kind of bottoming pattern, but it has a big void. Let's come back to that in 30 minutes. Greg, I don't know if you talked about this nickel squeeze. Wow. I think they said it went up 250% in a week. So they had a short squeeze. I heard CNBC saying some Chinese hedge fund got into a short squeeze. And do you remember I said that about wheat? I said wheat is a definite bear call credit spread candidate. We could do the 25s, which, I mean, look at the monthly charts. Now I know things can move, and I know that came out of a multi-year base, but does anybody think that's going to $25 in 10 days? I don't. So but I caution, you got to be careful fooling around with commodities. Because this is exactly, if that's exactly what can happen. You get caught. Shoot, I deleted my symbol already. Shoot, I forget what symbol I just had there. I had to Google it, pre-mark it. I know battery's another one because I Googled it. What are the top nickel ETFs? And I noticed this one in a downtrend. So this one had no short squeeze. This is in a nasty downtrend. How do you explain that? Easy. It's whatever's under the hood. So nickel, the commodity, is in a short squeeze. But it's interesting that if battery are the stocks, you know, why is this doing so bad if nickel just had a short squeeze? Secondly, what is nickel used for? Well, obvious answer is car batteries. So I don't, you know, I just put on my hat of, okay, what should be the effect on cars, electric cars? And I would think go down, right? Just use common sense. Same reason that the jets go down with oil high. Right, John? You see how simple I keep my analysis? You don't need to go to school to figure that out. So not a great pattern here, but if this closes like this on Friday, it's not a great price void, but I think this could easily, you know, drop to $20 or whatever. So we want to keep an eye on some EV stocks. We actually have Tesla as a bear call credit spread, the 900 strike. And that's, look at a beautiful pre-market sell setup. You know, folks, that is just, that's like I got to put that in our sell setup thing. Look, bullish gap negated, sell setup, 50% into the WRB, minor resistance from these prior lows, 3 topping tails. It's freaking beautiful. I'm gonna grab a screenshot of it right now so I don't forget. All right, so yeah, TAN is up. We talked about that, John. I mentioned SPWR, John, is my favorite. I did not scan the whole sector though. But yeah, solar stocks were in play yesterday and yes, today also. Let's continue. IPI had earnings, but no pattern. That's like, I think, related to potash or something like that. IMO alarm went off. We bought the gap fill yesterday, so that was a beautiful entry. And you know what? With the gap up, let's just move stop break even. That should not go back to yesterday's low now. If it does, I'm not turning that into